What's up, folks? Welcome back. Today we're talking about our favorite Fed chair, Jerome Powell, also known as Jay Powell. Just this week he said something really powerful, talking about what they were going to do with interest rates. When he walked out, this was the first time, and I've watched every Fed meeting, guys, because I'm an active trader. I mean, every single one. This is the first time where he came out and he looked visibly nervous. He was speaking from a piece of paper, right? He wasn't speaking from a prompt. He's speaking from a piece of paper, and he looked like his grandma had just passed away or something terrible was going to happen. And it did. The market reacted in a really big way. So let's talk about what he said. Let's talk about what the market did. And then let's talk about what we are going to do about it in this episode on Forrest Force. Let's get into it. He came out, right, and he was talking about really the Fed's plan going forward, what they've done in the past few months, right? We know that they've been raising interest rates, but what he really wanted the market to get, and what the market has not been respecting so far, is the fact that they are not going to cool this off. And you've actually seen that in stock market participation and price action over the past few months. So in the past few months, we've actually had quite a bit of a bull rally. And basically everybody was saying, and when I mean everybody, I'm a very active trader. I'm very active in all the forums, online, communications, all of that. Basically everybody's like, yeah, interest rates are raising for a little bit, but they'll cool off. And eventually, really everybody was waiting for Jay Powell to come out and basically said, hey guys, that's good enough. We're gonna start to peel back a bit. And he basically came out and said, guys, that's not gonna happen. We're literally not going to cool off on interest rate hikes. We're going to keep raising interest rates because it's working really well. Something that I thought was really interesting is that he started referencing previous inflationary periods, which he hasn't really done, right? And he started quoting the work of previous people in his position and talking about the last time that the U.S. government had to fight inflation. They kind of came out with a limp approach. We'll probably have to beep that out, but it doesn't work when you do it that way. He basically said, look guys, if we don't fight fire with fire, this is going to be a really protracted inflationary period. And his plan basically is to come head on and we're going to raise these rates, and until the market actually reacts. I think what he wanted the market to actually pull back like it did, but he basically said until the market reacts, until housing costs are actually depressed, and until corporations stop burning through money in the way that they have been, they're going to keep doing what they're doing. He wants the economy to cool off, and ultimately I think that's a good thing, but that's highly debatable. But let's talk about that over there. But Forrest, there's no way that's a good idea, right? Why should we let this one guy beat up the economy? Well, check this out, guys. The economy is like a living, breathing animal, right? And it's been on a war path for the last few years, really. The problem with that, and really the problem with inflation, is there's always people who, pre-runaway inflation feel like everything is fine, right? When the price of housing is going up 30% year over year over year, without cooling off, that's not good, because then eventually the market blows up. Same with stocks. When the price of stocks go up 30% year over year over year, it's not good, because eventually it blows up. And the way that it blows up is that the longer that period of expansion was happening, that period of inflation was happening, the bigger the explosion is, right? And so Jay Powell's strategy is basically, hey, we're going to kill this entirely, reset the economy so that we can have a healthy, period of true appreciation. Let's use housing, which is one of the biggest components of inflation, as an example, right? Who are the market for housing? It's regular people like you and I, right? Your budget to buy a house doesn't change that much year over year. Let's say you have $100,000 one year, maybe the next year you have $110,000, and the next year you have $120,000, right? Every $10,000 that you have might buy you, an extra $20,000, $30,000, $40,000, $50,000 a house because of leverage, right? The point is with inflation, the rate of inflation is faster than the rate of people being able to get more money, then every year you have less and less buyers, right? Even though the prices are going higher and there still are some buyers, eventually you're going to run out of any buyers, and then the whole market crashes. We didn't hit that point. We're getting close to that point though. The only reason housing prices were able to do that was because money was damn near free, right? The relationship between, I've talked about this many times, when money is cheap, if I could borrow infinite money, then I can buy anything, right? That's basically how it works. If money is just a little bit cheap, or costs just a little bit, then maybe I won't be able to buy infinite things. I can just buy a few things, etc., etc., etc. So that's what's happening. That's his plan. That's his strategy. I think it's a good idea because I'm a long-term investor. I'm 31 now. When I'm 40, I don't want to be in a dead, exploded economy, right? I want to be in a healthy economy that I know is going to continue to be healthy for the next few years. And really, there's a lot of reasons why we got to where we are today. You know, a lot of it is due to expeditious spending from really the current administration and the last administration. Not even to be political, those are just facts. Both admins have just spent a crap ton of money, and all that money has to go somewhere. Then there's also policy that happened. Regardless of how we got here, though, I think that this is, you know, Jay Powell gets a lot of heat. Is he perfect? No, I'm not saying I'm a fan. I think that he's making the right decision right now, and I think anybody in his position should actually do what he's doing right now, which is beat the economy up, really force it to cool off so that we can move on into better times. So what actually happened in the market? So the market, just this past Friday, right? Today is Saturday, August 27th for reference. So I'm referencing Friday, August 26th. I was trading. Jay Powell, he came out to give this talk. And as soon as he came out, the market dropped like 30 points. So what I'm talking about is SPX. You can look at SPY, doesn't matter. The market tanked, and then it rallied back up, and then it dropped off a cliff. It dropped off an absolute cliff. You may have heard of this on the news. You may have been watching the charts yourself, right, if you're a trader. But the market really, really took a hit. Banks, XLF, just continued to sell off all day. XLK continued to sell off all day. Healthcare, XLV, continued to sell off all day, like all day. This is the first downtrending day, like strong downtrending day we've had in a while, which is really, really interesting because when you have a downtrend in the market, that means that everybody, everywhere is selling. Everybody's selling. Nobody's buying. There's no buyers coming in saying, oh, thank God the price is lower, let me buy it up. No, everybody continued to sell, and it's a sign of the time. So we'll see what happens in the next week on Monday, but here's what we should do one way or another. So as traders, this is an amazing time for us, guys. We love the volatility. Let me actually tell you about my Friday, right? So I started out, I got chopped up, started my day like 3K down. Damn! I was not happy about it at all because I had some really late entries on the move. The move down and up was in a matter of minutes, and I tried to catch a put on the way down, I tried to catch a call on the way up, and I was shaking out. But I actually traded my way back to net zero, and then I traded my way back to profitability because there's so much volatility. As traders, we love volatility. You cannot ask for a better market. It was also a really strong trend down day, and so I literally just could have bought puts. You could have bought puts at any point in the day after that initial chop, and you would have been up 100, 200%. I think I had a 90% put at like 2 p.m. in the afternoon, right? So there was plenty of time to make money on that day. But overall, anytime the market has an injection of volatility, the VIX starts to spike. We like that. As traders, we hate theta burn, right? So if you imagine buying a call or any option and the price just does this, right? It's really, really good for market makers. It's really, really good for people who are selling premium, who are selling those contracts to you. And if you're in that scenario, you should be selling premium, right? It's something that we can do. Something that I do here every once in a while. Some different risk there, but going forward, I think there's a good injection of volatility into the market. Probably not fun for our long-term portfolios, but that's okay. We're gonna trade our way through it, make a ton of money. If you want more information on trading, see some of my older videos. I got some really good content just talking about trading strategies and things like that, and I'll probably shoot some more of that here going forward. But that is really it. Interesting times that we're living in, guys. There's always opportunity around the corner. Anytime the market makes a big shift, that means that the game has changed, and that means that we get to play a new game, and we can be winners in that new game. If you're still here, hey, Don't leave. Hit that subscribe button. Go ahead and share this with 2 of your friends. My name's Forrest. I invest in stuff you should too. See you in the next one.